Good day traders and investors. In this video we're going to analyze the gold. We're going to see how it's been moving in the last 1 month since we published our last detailed analysis on it, and we're going to look at the possible movements from this point onward. Let's get this going. What you have over here on the chart is the gold on a 4-hour time frame. This blue line over here indicates the date on which we published our analysis on gold regarding the December rallies. To be a bit more specific, when we published it, the price was just touching around the 1940 level. So, in this crossing right over here is where we discussed the possibility of the price of gold to start going up. If you have missed our detailed analysis on the perspective of the price of gold going up, a link is going to appear at the top of your screen right now, or alternatively you can find it in the description below the video. Since we published this analysis, the price of gold went up from this 1940 all the way up to 2147 over here. You can notice that this was an increase of about $206. This movement on gold was colossal on its own and provided a huge profit potential. A lot of you texted me after we published our first update about a month ago to share with me the amazing returns that you've managed to accumulate during this period over here in the last few weeks. Now, for those of you that have missed this increase and for those of you that caught it but want to make more profits, the good news is that the gold is still providing a lot of perspective, and now I'm going to discuss with you exactly what that perspective is. Let us first look at the correction that the price of the gold did. You can notice that since it went up to this new all-time high over here, over 2140, the price of gold did a very significant correction to the downside. One of the first things that we can do is to place a Fibonacci indicator and see exactly how much the price corrected. You can notice that over here the price managed to break below the 0.618. Now, early next week, one of the very important things would be to observe the price and see if it will be able to recover above this level again. But more about this in a bit. Now, something more important to look at, when we shared our last detailed analysis on gold, we were looking at the fact that the price of gold might be forming a new, general, bullish, uptrend market structure. At the time in which we discussed it, we had this, and we discussed how if the price goes up and surpasses above this previous major high around 2010, this can indicate the beginning of a new general bullish structure. And as we know, the price did went up and managed to produce exactly this. Let's remove those blue lines from over here so that we make it a bit more visible. Now, with the latest correction to the downside over here, we can notice that now the price is testing exactly the region around the previous major high in this bullish market structure, like this. So at this stage, we are having an alignment of the price sitting around this 0.618 Fibonacci, and also testing the support range created from the previous major high point in this new bullish market structure. If we add some moving averages over here, we're going to put the 20, 50 and 200 simple moving average. We can notice that the 20 and the 50 provided a cross ride over here, which led to a further drop, and right now the price is testing the 200. We can notice that this 200 has been confirming an uptrend since around this region over here, and the price nearly tested it once over here before going for this huge upswing that produced more than $200. Right now the price is testing it again, so this would be important to monitor as well. Couple of more things to look at. The RSI indicator was extremely overbought around this region over here, but with this correction on the 4 hour, the RSI managed to drop very low over here, nearly touching the 30. And the way that this is important for us right now is that this indicator has cooled down and it opens the doors for a possible increase which can surpass this new height of 2147. If we look at the MACD indicator, over here we can notice that as the price was falling, the MACD lines dropped below the zero line. Over here they produced a bullish cross, but it didn't last, and again they crossed for a bearish drop, which led to this drop in the last couple of days before the weekend. Now I want to explain to you exactly what you're looking for. It's very important how the price is going to act early next week. For us to look for good bullish circumstances in the near future, with the opening the price needs to start climbing up, and then we want to see a few things happening. The primary thing to look for is this block that was created over here with this volatility. You see, on a minor scale in this region over here, the price has been forming a smaller bearish market structure. For this market structure to change again to bearish, we need the price to go up and close above those levels right over here. In other words, we need it to close above 2040. If this happens, it would likely align with a few other things. First and most important, it would be a very strong rejection from this support range which was created from the previous major high of this bullish market structure. It would be a rejection from the 200 period simple moving average, and also the price is going to retrace above the golden zone of the Fibonacci levels. If this increase happens, monitor the MACD as well. On it you want to see a couple of things. You want to see another cross where the MACD line goes above the signal line, and also if the price goes up towards the 2040, what you want to see on the MACD is both of the lines going above the zero line, which would indicate a bullish continuation. If all of those conditions are met, then the price may continue to the upside with a perspective of making a new all-time high in the following month. So what about the potential increase? How big can it be? To think of that possibility, it would be wise for us to measure the recent increases that have been happening during this new general bullish market structure. If you give it a check, if we measure the movement from down over here, about 1812, up to over here, before the first strong correction, the price went up with close to $200. If we look at the same one over here, this one was a bit bigger at a bit over $210. We can say that the average size of those increases is about $200. Now, if we assume that the reversal point is somewhere over here around this region, which was close to the 2000, then there is a reasonable perspective to believe that on the next upswing the price of gold can target levels of 2200 and possibly above that. One very important thing to add over here is that when those huge rallying movements are happening, usually the price is moving in an exponential form. This means that every new bullish swing can be bigger than the previous ones. So following that logic, the next upswing may take the price much higher than this 2200. I want to remind you that according to the massive cup and handle chart pattern which has been forming since 2011, the price of gold has perspective to reach levels of about $2,800. If you don't know what I'm talking about, again, I would recommend you to watch our previous long-term analysis on gold, as it's covering the long-term perspective in much more details. One final thing that I want to show you today, if we switch to a daily chart, over here we can notice this volatile period which has been happening on gold for the last 3 years. Let's remove all of those things. Now, what I want you to observe are those three previous major high points in this region over here, which the price managed to surpass with this increase. For the price of gold to have a chance to go much higher, it's important for it to climb back above this range over here and to stay effectively above it. This range has its highest point over here around 2080, where we had the previous all-time high. And what we want to see in the following weeks is not only for the price to retrace back to the upside, but we want to see closure of candles above this range and not only a wick the way that we had it over here. If the price manages to build a few stronger candles closing effectively higher and higher above this range, this can be taken for even more long-term confirmation that indeed the price of gold might be starting its long-awaited rally. I hope that you've enjoyed this video. Let me know what you think about it down in the comments. Subscribe to our channel if you want to be updated whenever we publish other important market analysis or other educational content. Also, you can find us on social media, Instagram and TikTok. And additionally, from this week you can join our free Telegram channel on which we are also publishing detailed market analysis and important market information. You can find all of those links down in the description. I'll see you next time.